Okay, let's dive into this investor presentation from ITC Hotels covering their Q4 financial year 25 and full year results. I'm eager to see how they performed.
Agreed. It's been a dynamic year for the hospitality industry. I'm particularly interested in their growth strategy, especially after the demerger.
Right. Before we get into the numbers, there's a disclaimer on the second slide about forward-looking statements, which is standard for these presentations. It essentially says not to rely too heavily on their projections, as there are risks involved.
Important to acknowledge, but let's move on to something more concrete. What does the investor presentation highlight about ITC Hotels at a glance?
On the next slide, it outlines their key strengths. They emphasize their preeminent position in the Indian hospitality sector, embodying Indian hospitality and sustainability. They have over 140 hotels in 90-plus destinations. Plus, they make a point of their iconic F&B cuisine and brands.
The food and beverage component is really a crucial differentiator for ITC. Their restaurants are very popular and add a lot of value.
It's certainly a strength. They also highlight having 6 distinct hotel brands and strong partnerships, along with over 13,300 keys. By 2030, they are targeting 220 hotels and 20,000 plus keys, with a 30-70 owned managed mix.
That's an ambitious expansion plan. Increasing the managed portfolio is a good move for capital efficiency. What's their current operating footprint breakdown?
Currently, in the investor presentation, the owned managed mix is 42-58 based on keys. They are also excited about being awarded India's first hotel chain with USGBC Leadership Award for Organizational Excellence 2024.
That USGBC award is great for their responsible luxury branding. On the next slide, they provide a well-balanced hotel portfolio. Can we get some specifics?
Certainly. According to the investor presentation, 37% of their hotels, accounting for 5,000 keys, are in the luxury segment. The upper upscale segment comprises 25% with 3,300 keys, and the upscale segment is at 31% with 4,100 keys. The remaining 7% represents 1,000 keys.
Good diversification across segments. How does the macroeconomic environment support their growth strategy according to the presentation?
On the next slide, they paint a positive picture, highlighting India's decade of outperformance and growing affluence. They point to India being the fastest growing large economy, with GDP expected to reach $5.6 trillion by 2028.
Okay, so they are banking on continued economic growth. What specific metrics do they use to support this?
They cite rising incomes leading to higher discretionary spending. They also expect affluent households to grow 2.5 times. Additionally, there's rapid urbanization, with the urban population as a percentage of the total population steadily increasing.
The increased discretionary spending is crucial. I'd imagine that directly correlates with increased travel.
Absolutely. They show GDP per capita growth, projecting a rise to $3,744 by financial year 30. Moving to their next point, the investor presentation addresses the hospitality industry.
What are their key arguments for the industry's strength?
They show a strong recovery in the Indian hospitality sector. The sector remains significantly underpenetrated, with average keys per million population much lower than other countries. They also highlight strong growth in demand.
Underpenetration does present a significant opportunity. What are some specific growth figures?
They mention domestic air passenger traffic being up 12% over 2019. Demand is expected to remain well ahead of supply. The investor presentation notes a 9.1% demand CAGR from financial year 24 to 29, compared to a 6.3% supply CAGR from financial year 15 to 24.
Good to see demand outpacing supply. Now let's get to the financial highlights. What were the key takeaways from Q4 and financial year 25?
In the investor presentation, the full year total revenue was 3,333 crore rupees and PAT was 698 crore rupees. For Q4, total revenue was 1,017 crore rupees, up 17%, and PAT was 264 crore rupees, up 44%.
Those are pretty strong numbers. What contributed to that growth?
They claim that they have a record high performance and it's their highest ever revenue and profits. Also, 54 signings and 30 hotel openings in last 24 months contributes to the growth. It also highlights the demerger and successful listing with a market capitalization of over 40,000 crore rupees.
Impressive. Plus, their first international hotel in Colombo, ITC Ratnadipa, seems to be doing well. What about the Q4 revenue and profit specifically?
Revenue was up 17% to 1017 crore rupees. Operating EBITDA increased 24% to 395 crore rupees. And PAT was up 44% to 264 crore rupees. Their operating EBITDA margin was 40%, a 350 bps increase, and the PAT margin was 26%, a 490 bps increase.
Those margin improvements are significant. What does the investor presentation show for the full year's stellar performance?
Total revenue was 3,333 crore rupees, operating EBITDA was 1,189 crore rupees, and PAT was 698 crore rupees. Their operating EBITDA margin was 36%, and the PAT margin was 21%. The ROCE was 21%.
Solid overall. How are their owned hotels performing in terms of key metrics?
In this investor presentation, they are showing enhanced returns. ARR has increased from 8,000 rupees in financial year 20 to 12,500 rupees in financial year 25. RevPAR has increased from 5,200 to 9,100. Occupancy has improved from 65% to 73%.
Strong growth across all three metrics. What's the revenue segmentation for owned hotels?
In the investor presentation, room revenue accounts for 52% in financial year 25, F&B is at 40%, and others is 8%. Room revenue has increased from 46% in financial year 20.
It makes sense, as the revenue shows the largest percentage. Moving on, the investor presentation has a slide on their RevPAR premium over the industry. What's that look like?
They claim a superior RevPAR premium. Their RevPAR is plus 30% over the industry. The investor presentation also notes that ITC Hotels' RevPAR is plus 73% higher than the industry in Hyderabad, plus 53% in Ahmedabad, plus 49% in Chennai, plus 48% in Agra, plus 20% in New Delhi, plus 20% in Kolkata, and plus 16% in Bengaluru.
Those are considerable premiums. Let's talk about the ITC Ratnadipa in Colombo. How is it performing?
The investor presentation calls it a jewel in Colombo's skyline. It's a mixed-use development with 352 keys, plus retail spaces and residences. It's EBITDA positive in H2 financial year 25 with strong quarter-on-quarter RevPAR growth.
Good to see it contributing positively so quickly. Let's discuss their hotel signings and openings.
They've had record signings and openings, 54 hotels signed and 30 hotels opened in last 2 years.
That's a healthy pace of expansion. Let's go to the next slide and discuss what has been recently opened.
Sure, here are a few recent openings highlighted in the investor presentation: Mementos Jaipur, Welcome Hotel Jabalpur, Welcome Hotel Belagavi, and Welcome Hotel Delhi, Gurugram Highway.
That's a solid lineup, and actually the presentation also showcases some other recent openings across different destinations. For example, there's Story Jaisalmer out in Rajasthan, which looks stunning. Then you've got Story Urvashi's Retreat up in Manali, right in the heart of Himachal Pradesh.
Oh, and don't forget Story Devasom in Kolkata, such a vibrant spot in West Bengal. Plus, there's Welcome Heritage Natraj in Maklodganj, which is perfect for anyone heading to the hills in Himachal.
The Fortune brand's been busy too. They've opened Fortune Resort Bhaktapur over in Nepal, Fortune Beachfront in Puri on the Odisha coast, Fortune Statue of Unity at Ekta Nagar in Gujarat, and Fortune Select Candleum in sunny Goa.
It's impressive to see how ITC Hotels is expanding across so many unique locations, both in India and even internationally.
Okay, what about managed portfolio growth?
According to the investor presentation, they're seeing strong ramp-up of managed portfolio. The number of operational hotels has increased from 5,700 in financial year 22 to 7,700 in financial year 25. The number of operational keys has increased from 89 in financial year 22 to 118 in financial year 25.
So they are showing accelerated traction in scaling up managed portfolio and a 1.4x on the number of operational keys. Let's move on to food and beverage performance.
They claim robust double-digit year-on-year growth in F&B revenue. They mention sharpened focus and dedicated teams for their signature cuisine brands.
F&B is a major differentiator. What new restaurants have they opened recently?
The investor presentation lists Avartana at ITC Maurya, the Royal Afghan at ITC Grand Bharat, Kadsa at ITC Gardenia, Avartana at ITC Ratnadipa, and Islander at ITC Ratnadipa.
Impressive. Let's move on to sustainability. How is ITC Hotels performing on that front?
They highlight being a global exemplar in sustainability. They tout LEED Platinum certified hotels as the largest hotel chain in the world to achieve this feat. They have the world's first 12 hotels to receive LEED Zero Carbon certification and the world's first 8 hotels to receive LEED Zero Water certification.
Those LED certifications are great validation of their sustainability efforts. Are they meeting their emission targets?
The investor presentation mentions surpassing 2030 GHG sectoral emission targets set as per COP21. More than 50% electricity consumption through renewable sources.
Great. They've got all the awards to prove it. Now let's look at the numbers behind their operational excellence.
Their standalone financials show that they are driving margin expansion. Payroll cost as a percent of revenue from operations is at 21% in financial year 25 compared to 28% in financial year 20. Other operating cost as a percent of revenue from operations is at 28% in financial year 25 compared to 30% in financial year 20.
These metrics clearly indicates they are driving margin expansion and operational excellence.
The gross food cost is now at 24% compared to 27% in financial year 20, and the energy cost is at 5% compared to 7% in financial year 20. These are significantly lower versus peers on a cost per key basis. Productivity and efficiency are clearly improved.
Very impressive. How are they doing with customer satisfaction?
The investor presentation says that they are maintaining leadership position with the ratings that they've received. They have a 98.98% online ratings and 98% active feedback monitoring.
Those are great statistics. The high customer satisfaction rating is a testament to their commitment to experience. Let's shift to the strategic pillars they're emphasizing.
The 5 pillars highlighted in the investor presentation are continued investment to enhance brand equity, asset right, digital first, sustainability, and employer of choice.
Those pillars make sense. Asset light is definitely the way to go for expansion. What are their key differentiators?
They emphasize indigenous experiences, signature cuisines, responsible luxury, world-class loyalty programs, and a bouquet of brands catering to relevant need spaces.
The combination of those strategic pillars is what drives capital-efficient growth. What are the plans for owned hotels?
The investor presentation reports significant headroom to drive RevPAR growth. About 25% inventory less than 5 years old operating at less than 70% occupancy. They highlight ITC Ratnadipa Colombo as a significant contributor to revenue and EBITDA going forward.
So they're expecting that to have a major impact. What about upcoming projects for owned hotels?
They are planning 400 plus rooms and projects include Greenfield project at Puri and expansion at Bhubaneswar.
What about managed hotels?
They are seeing increased interest among asset owners with a robust pipeline of 49 managed hotels with 4,300 plus keys. They are targeting 2.5x growth in management fees by financial year 30.
Okay, significant growth plan there. What about recent launches in terms of unlocking their full potential?
According to the investor presentation, there is a significant headroom for growth. About 25% inventory operating at less than 70% occupancy levels. They list ITC Narmada Financial Year 23, ITC Royal Bengal Financial Year 20, WH Bhubaneswar Financial Year 22, and ITC Ratnadipa Financial Year 25.
It's a good overview of all the growth enablers in place. Let's talk about the growth opportunities.
Well positioned to execute selective inorganic opportunities. They have a strong zero debt balance sheet and cash generation to accelerate growth. They estimate capital investments will be 8 to 10% of revenue cumulatively.
It sounds like they have the resources to grow both organically and inorganically. Let's explore what they're doing to accelerate growth through managed hotels. So, what are the levers here from the presentation?
5 decades of hospitality expertise, bouquet of brands across segments, sustainability leadership, food and beverage supremacy, smart revenue management, strong loyalty and distribution, robust processes and brand standards, world-class digital infrastructure, strong partner ecosystem, and network effects.
Those all sound like solid strengths. Now let's look at the slide on managed hotel portfolio mix and premiumization.
The investor presentation shares that managed keys in the premium segment will constitute 47% of the total managed portfolio, up from 35% today. This is a 1.4x. Premium equals upscale, upper upscale, and luxury. 1.5x, 2.4x, 3.9x portfolio premiumization.
Sounds good. So the investor presentation highlighted that the managed pipeline for hotels has 50 hotels with 4,500 plus keys. What else did they mention?
The investor presentation states that they opened 29 managed hotels in the past 24 months. They are targeting 220 plus hotels with 20,000 plus keys over 5 years with 70% salience of managed portfolio.
Impressive momentum. Now the presentation shows how to augment revenue streams.
The investor presentation says sleep products and amenities, exquisite offerings curated for comfort. Luxury dining program, app-based online food delivery takeaway, among other things.
Let's look at the sustainability initiatives.
According to the investor presentation, they have these 2030 sustainability goals: water efficiency, net zero carbon goal, and waste reduction.
Okay, and finally, to wrap it up, how does the investor presentation summarize their position and future?
The final slide reiterates their strengths and vision: future ready, drive scale and profitability, strengthen brand portfolio, responsible luxury, and poised for next horizon of growth. The company is committed to long-term value creation. They are strengthening their brand portfolio and have a strong vision moving forward.